Hi there, a very good morning and good afternoon to all of you, depending on wherever you're watching me. This is Simply Stocks, and I'm live with another live session with you all. And in this live session, I would like to talk to you about uh, the IT, you can say the index and the IT stocks or the IT industry. The index itself is going through a very difficult phase, and we are seeing that stocks have been plummeting time and again. And over the last, you can say, 8 9 months, at least for the last 9 months, we are seeing a complete decline in all IT stocks. So I'll discuss about that, which stocks look good, which stocks could be avoided, and other points. And plus, I'll answer your queries as well. So, very good afternoon to all of you. I hope your investment and trading journey is going well and you're making money through trades, because the market has done exceptionally well since July, and it now seems like that the firm bottom is in place at 15,200, 300. So, good afternoon, Kishtok, and hope you are doing well as well. And let more people join in, and then I'll begin the session in earnest by talking about the markets. But just before that, I would like to talk to you on a lighter note about sports. So we have the Asia Cup right in front of us. So in about a couple of days, the Asia Cup begins. I did follow a little bit of the qualifiers that took place. Kuwait did well uh, by winning one of the matches, but eventually it was Hong Kong who has gone through. So that will be one of the countries in the Asia Cup, along with India, Pakistan, Sri Lanka, Bangladesh, and Afghanistan. That would be part of it. So India versus Pakistan on Sunday. I hope India do not repeat the same mistake that they did in the last encounter that we had in the T20 World Cup, and do not go slow while starting the innings. And this is the kind of, you can say, a change that Rohit Sharma has brought in as captain, that the team is doing well, and just start belting the ball from the word go, and scoring the runs even though they lose wickets. So hopefully this tactic should be employed again in this Asia Cup, and they should do well. So hopefully we should be in a good stead against Pakistan and in other matches as well, and do well there, and win Asia Cup again for the third time in a row, and probably the seventh time in overall. I've lost count, so maybe I'm wrong, seventh or eighth time. But this will be three in a row for India, hopefully, inshallah, this time around. And we should do well. So uh, there could be a chance that we could be taking on Pakistan three times in this event if they reach the final. So it would be interesting to see how these matches go about. It's in Dubai, so it would be a pretty hard fought encounters, because Pakistan have played a lot of matches there as well. But India should do well. They have a better side overall. So that's for the cricket. In terms of the EPL, finally Manchester United has come out with a win by winning against Liverpool. That was a good match, a really good encounter, a close tussle there, winning 2-1. And now we have the Football World Cup in November. We have the Cricket World Cup, T20 World Cup in October. It would be very interesting to see how things go about in that manner. So more about sports in the next session when I do it on Sunday, and it will be an India Pakistan encounter then. So we'll have the session probably in the early part of the day for that. Now, coming back to the markets. So the markets have done reasonably well, in fact, outstandingly well from June end, and the rally continues. So as we discussed last time around, thesis of having 14,000, 15,000 on the index was out of the window, and now 17,500 was where I thought that the market may reverse, and it did reverse from 17,400, 420. It looks like that we could be headed towards new highs, but the sectors that are performing this time around are totally different from the sectors that performed in that run up to 18,600. We had IT doing well. This time around, IT is not doing that well, and that will be the core focus of my discussion in this session. But in terms of the market, we are seeing small and mid cap doing extremely well. Again, today a lot of mid caps are on upper circuits. So be extremely careful in very small cap companies. There are in some of the stocks, might be building up, but in others, you need to understand that many or the whole small cap index has gone down so much over the last 6 7 months, that valuations are good in many of the mid and small cap companies. So you have to pick and choose and then take your bet over a 6 months to a year's period. Coming back to the point that I wanted to make in earnest, and this is about, you can say, the IT index. So the IT index is down 25% from the top. It did try to go up just recently, but after going up for about 2 weeks, it is now again declining. So things are not looking that rosy for the index per se, and it looks like we could head towards new lows going forward. The way there is complete dearth of buying interest, unless this is a, you can say, a position from where the index completely reverses and we have a bull run that is about to begin. Otherwise, uh, overall it looks extremely bleak. But yet at the same time, we are seeing that a number of IT stocks have also performed very well. So Tata Elxsi, for instance, has done extremely well and rarely falls. And there are other IT companies that have done reasonably well over this period. Uh, See, InfoEdge is part of the IT index, although it is a new age kind of a stock, and it has gone up from 32, 3300 to 45, 4600, and there are a number of companies. Now, those who are stuck in IT stocks, whether large cap or mid cap, what they need to do. So you have to then, those who are stuck in it, they have to understand what is their main goal for buying those IT firms. If their main goal was to hold those companies over a 4 5 year period, then they should hold on. I think this lull may continue for 6 months, 8 months, but then things should get better in Europe. Things should get much better in US with the kind of, you can say, interest rate hikes that US is doing. Inflation should come under control, but that will also mean that the projects from US and UK will not be that lucrative as it was before. So you have to really pick and choose, buy companies that have more exposure here in India rather than abroad, even in IT, and you should be fine. So my picks in the IT space, one is TCS at around 3200 or 3000 or around those levels on any dips. One can really look to buy TCS. Why I say that is that it is rarely seen that a large cap company, and at that the largest company in a sector, is trading at a greater value, you can say a very interesting valuation, very attractive valuation, compared to mid cap or small cap companies in the same sector. So in terms of TCS at 3240, trading at around 30 times at the moment. But if you look at 2 year forward earning, then it is trading at 21 22 times, which is extremely interesting. So first thing is the time horizon, and second is picking stocks and why one should pick one stock after the other. So whatever I'm talking about now, these are no recommendation, these are only for educational purposes. Plus, these stocks, if you really want to get in, you have to get in from a 4 to 5 year perspective, because next 2 quarters could end up being very bleak, and the stock may not move at all. If it does, if they don't go down, at least they'll not move. So that's my assessment in terms of these IT stocks. So one is in TCS, because of the long term, you can say, a PE that they trade at, it is on the lower end. So if you look at a 2 year forward earnings, which could be around 130, 132 rupees, the stock is trading at pretty interesting levels. If I take that at 3200, then we'll come out with a figure much lesser than what the peers are performing with. So 100 30, it's 24, 25 times. 2 year forward earnings of 24 times for the largest player in the industry. I think this is a very good bet at 3,200 to 3,000 levels. I will not be surprised in 4 years, 5 years time. You will see the stock around 7,000 levels, and you'll see a big run from 2025 onwards. I think things will keep on improving only with the kind of interest rate hikes that is happening in Europe and US. Things should come under control, and these IT companies should end up making money. So one is TCS. The second stock that I like in this space, and is from the mid cap space, uh, hasn't been one of my stock that I have talked about recently, or in a very positive manner, or in any manner whatsoever. And this stock is Scient. Now, Scient India is also something, or Scient Limited is something to be looked at. This is a smaller cap company, 10,000 crore market cap, etc. This stock had performed well, but the numbers have dipped. I think with Europe getting back on its feet going forward in the next 4 to 5 years, I think Saint should end up doing reasonably well. It should do decently well. The third stock I want to talk to you about. So, Scient, for one more line about it, is that it's trading at 16, 17 times earning, very interestingly priced. Very difficult to see it go much lower from here. I think the downside is probably 10, 12% at the worst, but the upside could be pretty big over the next 4 or 5 years. And so I believe that this is something really to look at. The third stock, many of you might be following, and you might be having even the retail investors are particularly invested into it. I am invested into this also from the last 6 8 months, and this is KPIT. I think KPIT, once this consolidation of 530 to 580 ends, we could see a 200 to 250 point rally, uh, which could be a streamline, very, you can say, smooth rally over a 3 4 month period. It could be extremely big. So, KPIT at these levels, although it looks expensive at around 50 times, 52 times, but if I look at earnings in FY24, which should be around, if I calculate here, it should be somewhere around 18 rupees, at least 18 rupees. At 18 rupees, I think it's 18 rupees earnings will be in 2 years time. So EPS should be 18, and the stock is currently trading at 570 rupees. So it is trading merely at around 30 times 2 year forward earnings. uh, I think it has potential to again go to 70, 80 times earnings over the next 2 years. It should do extremely well. It should command a PE of around 80, and should be well beyond 1,000 in the next, you can say, 2 to 3 years even. And over a 5 year period, if you have a long term view, a KPIT should end up doing so. TCS, uh, KPIT signed is something to really look at, something where one should really look at, you can say, making money with. So that's the call on this stock. Only 2 3 stocks that I have been preferring, and that is why I have talked about it. People are asking about Wipro. People are asking about Infosys, but I feel these could be some these could be stocks that could give you comfort. In the case of Wipro, the way it is falling, and the numbers, the kind of numbers it has produced, it doesn't give me confidence going forward, even for the next 1 year. Other companies may end up doing much better. That is not to say that you sell Wipro at this point of time with 18 19 times earnings, but over the next 1 or 2 years, if it goes back to somewhere around say 500 or so, then then you should really think about selling the stock rather than probably holding on to it. Currently, the stock is trading at around 400, so around 600 or so. take an exit, there could be a chance that you'll make lesser money in Wipro. That is why I didn't talk about it. But you will end up seeing the stock higher. Now, technically speaking, for Wipro, because the queries are coming in below 400, becomes extremely weak. It is very precariously poised, as I keep on saying. So, if you have it, hold on to it. If you don't have it, don't get into it. 400 is your final stop loss. After that, we could see a major decline in the stock, which could take the stock as low as around 330 or so. So that's the call on Wipro. All right, thank you. Thanks, Rajit, for your contribution. All right, so I'm ready to answer your queries. Kindly use the super chat and super sticker feature that will help me grow the channel. That will help you also ask me questions, any doubt answers in greater detail. See, I think it will be difficult for Birlasoft to do that. Santosh, thanks a lot for your contribution. It all depends on how things pan out in US and Europe. If things really get going big time, we could say complete reversal and then everything goes up. Otherwise, this is a very stock specific market, and especially in laggard indices like IT, it is extremely stock specific. So you look at a Tata Elxsi, the way it is performing, you look at the strength that KPIT is showing, and you look at something like a Mastech, the way it has fallen, or a Birlasoft, the way it has fallen. So very difficult to say. I think the chances are around 15-20%, no more than that. 80% chances are that either it will go down a little bit or stay here. I don't see much of a correction in the stock in Birlasoft, but I don't see it going to 600 that early. It could be a chance that 600 may come over 3 years, but not in 12 months or so. All right. So Borosil Renewables is a top class company. The way they have reshaped their business, and over the last 6 7 years, the way they have performed, very good company to hold, albeit from a mid or small cap space. But I would say that if you have it, hold on to it. If you don't have it, don't get into it, because I think the run up has been pretty big. So wait for some sort of a correction in the stock and then get into it. Over the last few weeks, the stock has gone up a little bit and has been consolidating. So something like a Borosil renewable, in my opinion, uh, around 500 or so is a good level to get in. But again, when I talk about these stocks, I say about them from a 4 5 year point of view, not from a, you can say, 6 months point of view. In 6 months we could even see 480 470. So around 500 520 is where Borosil renewable need to be bought. I don't see much of a downside from there. Okay, one stock that I missed in the IT space that I thought it should be something to be looked at and bought into, and if the space goes up, it should go up, and that is LTI, or Larsen and Toubro Infotech. In my opinion, Larsen and Toubro Infotech is also a top class larger cap IT company, or larger mid cap IT company that one can definitely look at buying and holding on to from a 4 5 year point of view to make a lot of money. Okay. So Danish Sigachi looks good, but it's a very risky buy. A disclaimer: I have the stock in my portfolio, and I would like to hold it for a couple of years. The kind of numbers it is producing, I think it is undervalued at this point of time. But if you can put in 4 5%, yes, you can buy. Map My India, I would say avoid. Not quite like you really want to buy into it, albeit it looks attractive here, but I think not at the moment. Do not buy at the moment. Abhi, hi. Thanks for your contribution. Can you suggest a roadmap for learning financial and learning about industry specific knowledge? Any books books for resources would be really helpful. So basically what I have done over the last decade is that I have gone through balance sheet, I've gone through their cash flow records of a company, and go through their you can say profit and loss accounts over a period of time, and were there any extraordinaries, how has been their profit growth, how has been their revenue growth, whether the revenue growth has come from organic or non-organic sources, and how has been their you can say interest expense, etc. So whatever I have achieved by simple understanding of their P&L accounts, etc. I don't have to, in my opinion, you don't have to go in extreme details of companies. Uh, but if you can really do that, it will only be helpful. In terms of books, I'm sorry, but I don't go through a lot of books. One Upon Wall Street, I have gone through. I've gone through the Warren Buffett, the whole story. Some sports books I have definitely read, but on stock market I have not read a lot, so I won't be able to comment on that. See, DMart as an SIP was big. I mean, at 32, 33, 3400. Now, after the run up, what you do is, yes, on every decline, 10 15% decline from the top, or say if it is at 44, 4500, around start buying from 4000 levels all the way down to 3000 if it goes there. And yes, you can do SIP then, but not at this point of time. On a little bit of fall, you can. So auto ancillary and chemical stocks are also good. I've talked about auto ancillary on many occasions. I've talked about some of the stocks as well. You look at something like Automotive Excel, you look at Endurance Tech, you look at Jamna Auto. There are many ancillary plays that one can definitely look at and buy into. Wheels India is another one, and you have Sudarshan. I think it was. Not Sudarshan Chemicals, but there are there are a couple of more you can say auto ancillary plays that is good. Now, Fame Industry is also pretty good, but the stocks that I have mentioned, Minda also is something to be looked at. Which is pretty good. So it was not Sudarshan Chemicals. I was trying to talk about Sundaram Fasteners. Sundaram Fasteners is also good. Once auto ancillary starts picking up, they will perform. So look at those companies, and again analyze those companies, and then pick only one or two of them, preferably one, and buy into it. Alright. If you own coffee stocks, coffee prices are at all-time high. So at this point of time, on in this rally, many of the people are holding on to McLeod Russell or Harrison Malayalam or many other coffee stocks, Tata Coffee, etc. It's better to book out at this point of time and buy in complete abysmality. So that is why I'm pretty positive on IT from a 4 5 year point of view, but not positive on a 6 months point of view. So again, what you need to do here is that whatever stocks you want to buy in any industry, buy it when the industry is in complete doldrums, and then you're going to make big money, because at that point of time, in that abysmal situation, end up getting very good prices and valuations for the stocks you buy. I would say Rajratan Global Wire over the last 2 3 quarters haven't come out with very strong numbers, so I won't say you get into it. So first row solution is an avoid. Although company has turned around, but there are better picks in this space as well. All right, guys. Thank you. Thanks a lot for being online. Please like and subscribe my channel. Hit the bell icon so you get videos straight away when I post. You kindly support me on Patreon. Thanks a lot for watching.